Welcome back to the channel. Today we are diving deep into a question on the minds of investors in 2025. Bitcoin versus real estate. Which is smarter right now? Or should you consider a combination of both? We will cover market trends, historical lessons, pros and cons, corporate examples, and even benefits by age and income. By the end, you'll have a clear roadmap for your investments. Let's start with numbers. Bitcoin's journey has been extraordinary, from a few $100s in its early days to over 114,000 as of September 2025. Median US home prices have steadily increased from around 200,000 in 2012 to over 480,000 today, depending on region. Bitcoin's growth has been explosive, but real estate has offered stability and tangible value. Major companies and investors have taken sides. Tesla invested over $1.5 billion in Bitcoin, signaling corporate confidence. MicroStrategy has billions tied up in digital assets. BlackRock launched Bitcoin funds for institutional clients. Meanwhile, Grant Cardone continues to champion real estate as a long-term wealth-building strategy. These examples show both Bitcoin and real estate attract serious players. But Bitcoin's volatility is real. Prices can swing 50% or more in months. Tesla and MicroStrategy portfolio fluctuated dramatically in 2022-2023. Real estate moves slower, providing stability even during downturns. That's the key difference. Bitcoin can multiply wealth quickly but carries higher risk. Real estate grows wealth gradually and predictably. Regulations matter too. China, Egypt, and Algeria banned Bitcoin. El Salvador embraced it as legal tender. In the US, the new administration has encouraged crypto adoption while protecting investors. Understanding how your country regulates crypto is critical for managing risk. Real estate history offers lessons. US home prices have historically grown about 3 to 5% annually. During the 2008 global financial crisis, prices dropped 20 to 30%, but recovered over the next decade. After COVID-19, low mortgage rates and high demand caused a price surge. Looking ahead, slower but steady growth is expected, influenced by interest rates, inflation, and regional factors. Comparing Bitcoin fractional ownership with real estate. Bitcoin allows fractional ownership. You can invest a few dollars. Real estate requires a significant capital, though platforms like Grant Cardone's funds let smaller investors access large properties. Liquidity differs. Bitcoin can be sold instantly, while selling a house can take weeks or months. Historically, Bitcoin has delivered massive gains. Early adopters saw over 19,000% growth. Tesla and MicroStrategy investors rode similar waves, but real estate is steadier, averaging 5 to 8% annually with rental income. Bitcoin's pros: it has high returns potential, fractional ownership and liquidity. It can be transferred to any part of the world in a 24/7 transaction. It has institutional adoption, but the cons are it is highly volatile, still has some regulatory uncertainty, and it has risk of higher loss. Real estate pros: it's tangible, you can feel it, you can see it, it stays stable asset. It can provide rental income and leverage. You can get mortgage and HELOCs, home equity line of credit loans out of it. It has tax benefits, but it also has cons. It is high capital, it needs maintenance and management are required. It has slower liquidity. It takes time to sell and get money out of it. Younger investors who are in their 20s and 30s who have high risk tolerance and long time horizon, Bitcoin can offer exponential growth for them. They can also start small in real estate through REITs, real estate investment trusts, or crowdfunding. If you are in the middle-aged investors from 30s to 50s, you need to have a balanced growth and stability. It can do mix of Bitcoin and real estate works best for you. Real estate provides cash flow and Bitcoin adds upside potential. For older investors who are 50 and 60 plus, they have lower risk tolerance. Their focus should be on real estate and they should also have a smaller Bitcoin exposure. For high income earners, they can diversify across both Bitcoin and real estate. For moderate income earners, your focus should be on stable real estate and small Bitcoin exposure. For low income earners, you can start with fractional Bitcoin or real estate investments. Combining both assets is often the smartest approach. Bitcoin offers growth potential, Real estate offers stability and cash flow. Allocation depends on your goals, your risk tolerance, and timing. Bitcoin can generate huge returns but comes with volatility and regulatory risk. Real estate offers predictability, tangible value, and leverage opportunities. Corporate adoption highlights legitimacy for both asset classes. Historical cycles like 2008 and post-COVID show the importance of timing. Age and income help determine which asset is more suitable. Both Bitcoin and real estate have a place in a diversified portfolio. Understanding your objectives, horizon, and risk appetite is critical. If you like this video, if you find this helpful, subscribe for more insights and share your questions or experiences in the comments. Thanks for watching and invest wisely.